Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, here we are again at the end of the week, and virtually since Tuesday we really haven't seen any action. We did render a new high on the SPX, but we've drifted sideways ever since. We did receive an RXT sell on Tuesday, and we really haven't seen much momentum on the upside. It's just been drifting. We did print a new high yesterday at 36.82, but the market sold off of there and actually closed lower on the session. As I'll go through here in a few minutes in the technicals, we are starting to see some dissipation of the upward momentum. It's still there, suggesting that today will be key on how we close, not only from a short-term viewpoint, but also on the intermediates. As we look back on yesterday from a fundamental viewpoint, we did see the continuing claims come in below 6 million, came in below my estimation of 5.8 at 5.5, and this is a good metric. That, I believe, put somewhat of a bid in the market, but it wasn't really material. The claims dropped quite a bit, still very high at over 710,000. We're not out of the woods by any means on this unemployment situation, but there's definitely some incremental improvements, and with these metrics staying so high, it really doesn't bode well for the markets as we come into year end. Overnight, there's a slight bid in the futures, and we're seeing some movement to the upside, but the volume is about half of what it normally is. It's very quiet ahead of these employment numbers that are going to be released. And the expectations for the employment numbers are for about 550,000 new jobs and unemployment to remain at 6.9%, which is very elevated to say the least. But compared to where we were several months ago, it's good. As we know, this is a disastrous situation that we're living in right now. This is very high unemployment. There's going to be a lot of challenges as we go forward in trying to reconcile the economy and what's likely to happen as we go forward. Our old favorite story started to emerge again today, which was stimulus. I talked about it last night that Schumer and Pelosi were talking. We needed to get the other side of the aisle involved. There was some rhetoric today that there is some talk with the Republicans to try to put a stimulus deal together, and the news that was out there said that the Republicans thought they could be close to a deal. They're not close to any deal. They're not going to do any kind of deal, especially with all of the election uncertainty that still lags out there with lawsuits and with the potential of the Supreme Court getting involved. We're long from being over with that story for sure, and I just don't see, once again, these guys doing a stimulus deal right now. I think one of the more interesting things that we've seen this year, markets have responded more to news stories than I've seen them ever before. There doesn't even have to be substance behind the stories. The algorithms and maybe the new players that are out there in the markets are responding to these numbers. One of the other things that I think we're starting to see, as many of those so-called gambling participants that we were talking about, they couldn't bet on games, so they were coming into the stock market to gamble. I think those guys are gone. I think a lot of Robinhood folks have lost their money. They found out this is a really tough game to play. It's not easy like a lot of folks were saying it is, and I made this comment probably 2 months ago, maybe around the June highs. As we came into September and October, I said the easy money is over. There is no more easy money. Everything that you're going to make in this market now is going to have to be based upon really solid decisions. Stock selection is going to be key going forward. And the whole play that we saw in the COVID game, all of that stuff is over. Maybe there's some more vaccine news to come out, but even then, that's becoming mixed. And it's possible that we could see maybe on Monday some approvals, but it looks like the Pfizer vaccine has a better chance in the UK than it does in the US at the moment as far as an emergency authorization. So who knows what they'll throw at us on Monday over the weekend. I think as we come into the unemployment numbers today, this is going to make the difference, as I said earlier, and I'll cover this in the technicals. This is going to make the difference on how this week closes and whether or not we can get any VIG or any kind of momentum back into the markets. So let's go ahead and take a look at the charts, see how they're setting up for the end of the week. As I review the WaveTech database, we're still seeing some positive rotation. We had about 400 new buy signals again and about 250 sells. So we had a slight positive rotation, neutral on 1.2 model, but positive on the 3.2 model. Percent bullish now, moved up to 78.92%. Like I've been talking about for the last few days, I think this starting to stall here. The duration has ticked up to 14.3. So if we just take the trading days left in the year, we're right at around 20, 21 sessions left in the year is all. And to get to typically this number, this duration number will get to about 80% of the 40. I have seen it exceed, so it could do that. But that puts us right at New Year's Eve, day before. That's where this database is going to become pretty overbought. So this scenario that we're seeing unfold in the markets are likely to continue during this period. Depending on what happens around election news and other things, we could see some rotation going on. Who knows what kind of dynamics are likely to come out of this season. They've been throwing all kinds of COVID news at the markets, and nothing seems to be really affecting it. Today is Friday, so we're going to be running our intermediate signals, and we are trading at all-time highs. We're likely to see some further rotation, but that, if we don't see rotation on the intermediates, will also tell a little bit of a story of, at least from a traction standpoint, that maybe the markets are stalling right here. So I'll be talking about that on Sunday night's video. As we begin with the futures, I mentioned in the opening commentary that we're seeing some dissipation of the upward momentum. Now, PPM 1 is at a plus 0.26, which is in trend mode. PPM 2 is at a 0.31. It's crossed through to the downside on its first derivative, and PPM 3 is also through its first derivative on the downside. So it's showing that this trend is actually stalling here, and we're not likely to see a pickup in the volatility. Now, the only caveat that I can say here is if we do get really positive news and the unemployment spikes this thing up, we could reset this momentum a bit and finally get the VIG in there, get the momentum that's going to push this market into the next levels. But at the moment, it looks like we're going to fade, and it will be all about today's close. As we look at the market grid on the futures, overnight it's been very quiet. We've only had 39,000 contracts trade. Usually around this time at night, we're pushing into 75, 85,000 plus. So we're about 50% off on the volume right now. The high has been 36.74. R1's 36.73, so we printed an R1. The low is 65, 36.65. S1 is 36.55. And based on what I'm seeing here and this mixed picture on the PPMs, I'm going to go with the potential R2, S2 range for tomorrow. R2 would represent a move to retest yesterday's high. I think that's in the cards. This will be a fairly volatile open in the U.S. Let's take a look at the SPX. I think the story is being told better here. We've got this mixed picture on PPMs. Now we have PPM 1 at a plus 0.27, PPM 2 at 0.39, and PPM 3 through its first derivative, but at a plus 0.18. Now, what typically will happen out of this configuration is we'll continue to stay within the grid. Now, the RXT sell that we got on Tuesday, we've had 2 days sideways. I still expect to see us print down as we look at the market grid for today on the SPX. I still expect to see this thing print down toward at least that S2, maybe S3 level. Today may have the volatility in here, depending on how these reports come out today, may have enough volatility to print down to those levels. I don't see any kind of rollover here. As I mentioned, the creepy crawler is going to continue, meaning it's just going to climb underneath this 10 period moving average. Now, 10 period moving average is at 36.24. It's rising 10 handles per day, so that's going to be 36.35. STX for today is 36.38. So a move down to the 10 period moving average would also represent a move to where the STX is as well. So there's going to be substantial support there, and we're going to have enough momentum in the PPMs to hold the market. So I don't see any big rollover happening today. Just expect to see more of what we've been seeing this week since Tuesday, just seeing this kind of choppy sideways range. Yesterday's action was interesting in that we printed a new high and then immediately reversed, and the close was even more interesting from my viewpoint, as we printed down all the way down to 36.60 and then bounced 6 handles in that 2-minute period. We saw a nice snapback in that last few minutes of trading, so no one wanted to be short coming into the numbers that we're going to see today. As we look at the weekly chart, we're seeing one of these mini, starting to introduce you folks to the dragon head. We're seeing a mini dragon head set up, and these usually suggest, as I've been telling you, that these will typically suggest that we're going to stay within that grid number. So if we look at the grid for this week, the high end is R2 at 36.90, so we came pretty close to that with a high yesterday at 36.8273. If it got through R2, then 37.17, that would just throw us right through the 37 handle. I don't see that happening, but like I said, we've got this major news coming out, and there might be some short covering ahead of Monday, because actually, who knows, throw a vaccine approval or something in the mix. And so we're seeing the type of action around this thing that's telling us that there's still an underlying bid, telling us the markets are going to move higher, and we're going to keep printing toward these R2, R3 numbers on a weekly. When this gets updated today, we will see the market grid turn back up a little bit. So the expectations for moving above 3,700 next week are going to be fairly high. Next market I'll cover is NASDAQ. NASDAQ overnight is up 0.36, up 45 handles, so we're still seeing some strength. As we look at this chart and the configuration, we are seeing a slight stair-stepping up each day. We're seeing a little bit of positive. In fact, yesterday, the NASDAQ was the stronger of the indexes. It was only up 0.2, and S&P was down minus 0.1. And so we're seeing just that slight little bias. I've been talking to you about this over the last several days, is that the configuration on the NASDAQ has a slight stronger bias than the other indices do at the moment. But as we look at the PPMs here, you see that PPM1, this is live and calculating and considering this 0.36 positive number. These are calculated in real time. It is actually taking out its first derivative on PPM2. PPM3 is very flat, and PPM1 is also downtick. So this, in spite of this strength that we're seeing, we're not seeing that momentum starting to flow in, and typically that will tell us we'll just stay in this little sideways little range. There's probably going to be the creepy crawler I talk about. If we look over on the left-hand side here, we'll see that this move that we saw back in September had a little more pronounced move to the upside. I think this is going to be a little bit flatter. Like I said, it's all dependent on today. If we look at the weekly on the NASDAQ, just to look at the setup for the end of the week, It's also breaking out of this little pattern, but we're setting up that volatility. But this is fairly substantial in that we're going to see the grid turn up next week. So we are going to have more bias to the upside as we come into next week. The next market that I'll cover is the Russell, and we did see that 5-week surge. I talked about this a few nights ago, and now what we're seeing is the potential for us to go into a sideways range. Now the PPMs are off the map. This is a very strong uptrend that we're seeing, but this is the likely point for us to stall and set up some sort of consolidation pattern up here. So in spite of this sharp upward move here, we're seeing that the momentum is strong, but we're also completing a 5-bar pattern, which should have at least 3 weeks sideways. And as I mentioned when I was covering the database, it just looks to me that we're going to try to grind out the rest of this year, that everything that's already happened has happened. There's still, as I mentioned, in S&P and the NASDAQ, and in this chart, this market grid will turn up as well. There's going to continue to be a slight upward bias. But taking a glance at the daily, you can see that what we're looking at here is momentum looking just like the S&P, in fact, just a touch weaker. So I expect to see that a little bit of a flat to negative rotation from the standpoint of the leadership of what the Russell, how the Russell's been leading versus the NASDAQ. The final market that I'll cover tonight is gold, and gold has ended up to have a pretty decent week. We're trading at 1843. The high's been 1848, so we've moved right into that 0.236 number on this Fibonacci grid. We look at the 21-day moving average. This is going to be key. It is at 1853 right now. We printed 48. This is probably going to be the cap, and if we're going to see anything set up early next week as we come into Monday, we're going to see this thing set up most likely between the 10 and the 21-day moving averages. That's roughly going to be around this average. The 21-day moving average is declining, so it's going to be around 1850, and on the downside, we're going to be looking at 1818, maybe as low as around 1810 next week. This is obvious when we look at the market grid on the weekly chart. It will be similar as we come into this. As we come into next week, the market grid is going to be somewhat similar. My expectation is it will stay flat, so we'll see numbers like what we're seeing on this chart here. The only difference is we're likely to see S1 be around that 1810, and then the bottom end of the numbers are going to be most likely closer to 1740, 1760 number, which is around those lows that were printed early in the week. The low was 1767. So that will be, from a market grid standpoint, my expectation on this weekly chart, we won't retrace back to there. Most likely we'll print back into 1775 or something like that. I'll cover this on Sunday night. But this market has got the potential to set up a low here. There's quite a bit of work, but the PPMs on a weekly are showing that we crossed the first derivative on PPM 1. It's still negative, but that's a big sign that we're beginning an intermediate bottom. And this is also going to be driven by other things such as the Dow, and I'll cover this on Sunday night's video. I'll go into more depth. This will complete the video. Once again, thanks for a great week. Thanks for hanging out and watching my videos. We really appreciate it. Thank you again. Have a great weekend.